Welcome to Money Savvy Kids. Money Savvy Kids is a financial literacy program for children and young adults. The lesson will include an explanation of the following topics. What is debt? How do we get into debt? Good and bad debt. Credit scores. Debt counseling. Managing debt with budgets. Parents can expect better financial skills and an understanding of financial terminology from their children. What is debt? Debt is the amount of money that you owe to a person, bank, or company. Being in debt is the state that you are in because you owe money to someone or an institution. How do we get into debt? Understanding the causes of debt so that you can make sure that it doesn't take over your life in the future. There are many ways to get into debt. Here are some examples. Bad money management, unemployment, reduced income, high medical expenses, gambling, addiction. Is there such a thing as good and bad debt? And do you know the difference? What is bad debt? Debt is considered bad debt if your money is used to buy assets that will fall in value, which means they won't earn you money and it's not tax deductible. An example of this is using a credit card or personal loan to fund things like luxury items like cars and expensive holidays. Good debt. Good debt is anything that helps you purchase wealth-building assets. This means that assets that generate income or grow in value over time are considered good debt. An example is borrowing money from the bank to buy a house or an investment property that will appreciate in value over a longer time. Or buying cleaning products to start a car wash business is another good example. What are credit scores? A credit rating or score is an estimate of the ability of a person or organization to fulfill their financial commitments based on previous dealings. So if you have always paid back your loans, your credit cards, and your accounts on time, you will have a higher credit rating or score than someone who has missed and made late payments. Your credit score is a 3-digit number calculated from your data-rich credit report and is one of the factors used to determine your credit worthiness. Your score will affect whether or not you will get finance or loans approved. Debt counseling. Debt counseling is designed to provide over-indebted consumers with an alternative to traditional remedies for defaulting on your debt. These are administration and sequestration. There are disadvantages to both administration and sequestration. For example, you may apply to have your debt placed under administration, only if your total debt is less than 50,000 Rand. The administration charges are high, at 12.5% interest on every installment paid. When you go into sequestration, your assets are frozen and sold off to recoup as much of the debt as possible. Your sequestration attorneys will distribute the money to all of your debtors. Sequestration is made in order of the court and you may no longer apply for loans, own a property, or be a director in a business. Once all the money has been paid back, you have to go through a rehabilitation process. What is rehabilitation? Debt rehabilitation is a legal process where a high court relieves someone who has been declared insolvent of any legal repercussions of being insolvent, returning their legal status so they may now apply for loans, buy a property, or again be a director of a business. The process restores a person's credit worthiness after a court has ordered a person rehabilitated from debt. Only when a person has been sequestrated can he or she apply for rehabilitation. A debt advisor or legal professional will carry out an assessment to determine whether you are eligible. Managing debt with budgets. What is a budget? A budget determines your monthly living expenses, periodic expenses, and monthly debts. Follow your budget as closely as possible and compare actual expenses with planned expenses on a monthly basis. How to manage debt with budgets. Managing your debts properly by allocating monies owed to your creditors and pay the amount owed every month. Always pay your bills on time. Avoid paying only the minimum on your credit cards. Don't charge more than you are repaying to your creditors. Determine what your short, mid, and long-term financial goals are. What kind of position do you want to be in? Plan for the future, major purchases, and emergency expenditures. Take care of your needs first. Spend money on wants only after your needs are met.